So one of my students took this trade. She is from Italy and she came to me back in November 2023. Before that, she was learning from me through my candlesticks programs on Udemy. That's how she found me. And then from November, December, January, 3 months, I trained her. And since that time, she has been using this system. So this is a trade that she took. So this is SKWD. So this is a stock that is traded in the NASDAQ Skyward Specialty Insurance Group. So this is from the multi-line insurance company. Sector is finance. Okay. So let us discuss where did she buy the stock. I'm not sure whether she has sold the stock yet or not because I meet my students every Saturday. So next Saturday, I will come to know what she has done. I know for sure that on this candle, she had not sold the stock. Okay. And she bought on this day. So first, let us try to understand what was her thought process before she decided to take this trade. So, a student from Italy taking a trade on NASDAQ. Okay. So, what I'm trying to say is whichever country you are from, this strategy can be applied in any market that you want to trade. It is all based on basic demand and supply dynamics. Let's look at this trade. Now, if you remember from my past videos, whenever we look at any stock, we do three kinds of analysis: comparative analysis, technical analysis, fundamental analysis. As far as comparative analysis is concerned, this stock at the time she bought had relative strength of more than 90. So that's a good price strength shown by the stock in the NASDAQ market. That's number one. Number two, the stock had poor industry rank. So the industry was not doing well. So this is a stock. This is a overperforming stock in an underperforming industry. So there is something about the company which is making the stock go up. So it is going against the trend of the industry. So there is something special maybe about the company. We will have to look at the news items or whatever. As a trader, I don't do that. I just look at the industry performance and the stock's performance. So the relative strength of the stock is good, but the relative strength of the industry is not good. And as far as institutional demand is concerned, we can go to the weekly chart. Let me show you the weekly chart. See, on the weekly chart, if we see volume going up when the price is going up, okay, or above average volume when the price is going up, and below average volume when the price is going down, that's a sign of institutional strength. So let's go to SKWD. Let's see what we see here. See, green candle, above average volume, okay. Two red candles below average. See, generally you see red are below the blue line and green are above the blue line. That's a sign of institutional demand. Okay. So institutional demand is there, relative strength is there, only industry rank is poor. So overall, I would say comparatively the stock is weak because of the industry. Now let us look at the technicals. So we have done comparative analysis. Now let us look at the technicals. Well, the price here is above the 50-day moving average, which is the blue line, which is above the 150-day moving average, which is the green line, which is above the 200-day moving average, which is the red line. Okay. So this is a strong stage 2 uptrending stock. So blue, green, red. Then we look for minimum 10 candles in the base. So this is point 1. So you start counting from this red candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and more candles. So this has got minimum 10 candles in the base, which means minimum 2 weeks of consolidation. Okay, actually, this has 3 weeks of consolidation if we count all the candles. And we want minimum 4 points in the base. Okay, so how do you draw the points? Well, you just connect the extremes. So this is point 1. And that's point 2. The high of this red candle is point 3. Then the low of this green candle is 0.4 and the high of this candle is 0.5. Okay, so 5 points in the base. We want minimum 4 points in the base. So blue, green, red, 10 candles, 4 points. Blue, green, red, 10 candles, 4 points. Blue, green, red, 10 candles, 4 points. Just memorize this technique. Okay, it will help you a lot. So I will remove this. So all the conditions. So technically it is strong. So comparatively, we can say the stock is weak because the industry group rank is not ideal. Technically, we can say the stock is strong and it is well set up. Even the current price, the distance from the current price, current closing till the yellow line is less than 5%. So, which is very good. We want tight price action. And moreover, you see tight price action here. If I remove the candles, see tight closings here. Okay. So comparatively, stock is weak. Technically, stock is strong. What about fundamentals? Let us look at fundamentals. So you click here. Now, since this is a NASDAQ stock and I don't have Market Smith for US market, so I look at trading view. So this is good for people who do not use Market Smith. You can use this technique on all the markets, even if you're trading India. So that's fine. So this is a quarterly performance. Look at the latest quarters, 35%, 30%, 25%, double digit growth. So although this is decelerating growth, but still you have double digit growth. You have more than 25% growth in the recent quarter. That's sales. Coming to net income, see 157, 59, 68. So 68% growth in the recent quarter, okay, in the earnings. Fantastic. Okay, so the stock looks fundamentally strong. Let us look at the margin of the company. I go to annual. Let's see whether they show net margin of the company. So net margin, it has gone from minus 16%, 3, 9, and 12. So it looks like a turnaround story. It has taken 3, 4 years for the company to come to a decent margin. Okay, so the margin is expanding. So sales are growing in double digits, earnings are growing in high double digits, the margin is expanding. What else do you want? What's the return on equity? Return on equity is more than 17%. So fantastic. Fundamentally, the company is strong. Okay, which means what? If fundamentally the company is strong, you are looking at a potential positional trade. Okay, so now we have a situation. Remember my videos on how to categorize stocks. So you look for the scenario. So the scenario of this stock is the stock is comparatively weak, technically strong, fundamentally strong, and it is about to break out. In my view, this is the ideal scenario because this is a stock which is not yet, the market has not yet realized the potential of this stock. Agreed, the relative strength of the stock itself is very strong, but the industry rank, since it is poor, okay, if more money begins to come in the industry, first it is likely to come to this stock because this is fundamentally a strong stock. Okay, so that's my argument about this stock. That is probably the reason why my student, she decided to take this trade. So next day it broke out and it broke out on high volume. So she held on to the stock because the stock gave price confirmation and volume confirmation. Price confirmation means the price closing above the yellow line. Volume confirmation means volume closing above the blue line. Okay. And you see, this is not some penny stock. It has minimum 200,000 shares traded per day. Okay. So the average daily volume of this stock is 342,000 shares traded per day. So this is no penny stock. This is not some illiquid stock. So it's a decent company to go with. Okay. If you want to look at the market capitalization, no, it doesn't come here. I think it will come in the financials overview. If you see, market capitalization is $1.78 billion. Not very great, not very big company, but still decent for our analysis purposes. We don't have time to read the annual report and balance sheet of the company. The stock is doing what we expect it to do, and then we go ahead with it. Okay. I am not saying that this is the leading stock. I am just saying this is a overperforming stock in an underperforming industry. So when the industry rank catches up, okay, this stock will get noticed because it is technically and fundamentally strong company. Okay. So this is a good opportunity. Now that the stock has broken out, we are looking at a potential positional trade. And as the industry rank improves, we can look to hold on to the stock as long as it remains above the blue line. Okay. Now let's talk about trade execution, how she might have executed the trade. Now I have not discussed with her how she has exactly executed the trade, but I know her personally. She is an aggressive trader. She likes to take risk. So I guess that the moment it broke above the yellow line on the 15-minute chart, she must have put her order. So I will show you the 15-minute chart and we'll discuss some trade execution here. Okay. So let's go to the 15-minute chart of 3rd October. Okay. So I go to 15-minute chart and I go to 3rd October. So have a look at this. The blue line, the yellow line was broken here. So probably she bought here. Ideally, she should not have bought here because the volume on that candle is low. But since I know her, I know her trading style. She's an aggressive risk taker. She likes to take risk. So she probably bought here. If she did not buy here because of volume, I can tell you that she definitely bought here because this candle not only shows high volume, like 300, 400% more volume than the average volume, but it also completes a rising window. If you see here, between the high of this candle and the low of this candle, there is a gap. That's a rising window. A rising window is a very positive sign. Okay. So she must have either bought here or here. That is my understanding of how she executed the trade. And since she likes to take risk, she probably might have given some time to this stock because it was technically and fundamentally strong. I always say that if a stock is showing technical and fundamental strength, please give it some time. Okay. Give it some room to fluctuate, at least 1 hour, maybe 2 hours. Keep your stop loss at 8%. That is our emergency stop loss. If the stock starts to come down, you could choose to reduce your position size by half or 25% or 75%, but do not sell all your shares. Okay. So I don't know exactly what she did here. All I can say is she probably bought on one of these two candles. So during this half an hour period, she made her purchase. She kept her stop loss at 8% probably because that's the general stop loss we keep. And since this is fundamentally strong, I am assuming that she gave it some time. She waited for these 45 minutes. This must have been difficult for her, but then her patience paid off. When the stock finally came above, there was no looking back. The stock never came back to the yellow line. So if she tolerated this, and I am assuming she tolerated this because she likes to give room to a stock, especially if it's fundamentally strong. And I assume she tolerated this for these 45 minutes. Okay. 3 candles means 45 minutes. And her patience paid off. Okay. So going back to the daily, that's how she executed the trade. Going back to the daily chart. Now comes how to manage the trade. Now, when the stock breaks out, next day it is showing a follow-up candle with above average volume. Okay. Immediate next day it shows weakness with above average volume. Now, since we have two candles, one breakout candle, one follow-through candle, the relative strength of the stock must have improved, plus the industry rank probably must have improved. So now that stock is technically, fundamentally, and comparatively strong. For such kind of a stock, we give it some time to fluctuate. As long as it remains above the blue line, we don't do anything. Okay. That is how we approach a particular stock, because a stock can remain above the blue line for 12 months, sometimes 6 months, sometimes 18 months. Okay. That's a classic positional trade. But during those months, you have to sit through a lot of ups and downs like this. So you have to sit through that volatility. Okay. If you are prepared to do that, you can become a very good positional trader. Now, I know what she did. She did not sell here. She decided that she will give it time. Probably the stock is above the 8-day exponential moving average. So that's why she did not sell. I have not put the 8-day exponential here, but definitely it is above the 21-day exponential moving average. It is comfortably above the blue line. It is comfortably above the yellow line. So she decided that she will not sell. Even on this candle, she did not sell the stock. Okay, that's I know because last Saturday when I met my students, she was there and she was discussing this stock. So she did not sell. Now I don't know whether she has what she has done during these 3 days, but I am assuming that she's tracking the blue line because now that crossover has happened. The blue line and yellow line crossover. See, there is a rule by Mark Minervini, the blue line or the break-even rule. So if you bought at the yellow line, when the blue line crosses the yellow line, then the blue line becomes your by default your stop loss. The moment the stock closes below the blue line, you sell the stock. Okay. And she did not do any partial selling as well. So that is how she approached the trade. So she did three kinds of analysis: comparative analysis, technical analysis, fundamental analysis. That is how she came across this stock, number one. Number two, she executed the trade properly. She bought it on the 15-minute chart. She placed a stop loss. Number three, she held patience because the stock is fundamentally strong. If the stock was fundamentally weak, she might have reduced her position size, but I know that she did not reduce her position size. Third, what she did is she managed her trade properly. She allowed it to go up as long as it was above the 21-day exponential and the blue line, which is the 50-day exponential. So, can you see the skill that she has developed? Earlier, she used to buy extended stocks, but now she is buying at the proper buy point. So, there are three skills at display here. My student from Italy has displayed three very good skills. Number one, stock selection. Number two, trade execution. And number three, trade management. Okay. And in between one and two, there is patience. Okay. Which is a far better skill than all the three skills which I have just discussed with you. If you have patience with a stock which is fundamentally strong, you are likely to make money. Okay. And the stock still remains comfortably above the yellow line. So there is no need to worry as such. I don't know whether she sold here or not. Wherever she sold, she made a profit. But if we measure the distance from yellow line till the peak, the profit potential was roughly till the peak, it was 16.37. So 16.37 is not the return that she got. 16.37 is the distance from the yellow line to the peak. Okay. It's not the return that she generated. So that's very important. The return that she generates depends on where she sells. So if she sells here, obviously she's not making 16%, she's making 10%. But I know she did not sell here. Probably if she sold here, she's making good 10 to 12%. Okay. But I know she likes to give time to a stock as long as it remains above the blue line. So if she needs profit to finance trades on the next finance her future trades, she probably might have sold. But if she doesn't need that profit, if the past 4 or 5 trades, if she has been making money, she would probably give this stock more time. So it all depends. See how many skills she has developed through the training. This is why training is important. She understands stock selection. She understands trade executions. She understands trade management. She has got patience now, and she's holding on to the stock as long as it is above the moving averages. Plus, looking at this candle, she might have felt good because this is, although it's a red candle, but it's a bullish candle. Look at the above average volume and look at the height of the lower shadow. The bigger the lower shadow, the more bullish is the stock. Okay. It's not a hammer, but it's a bullish sign. Okay. So it might pull back. Okay. So that's the trade I wanted to discuss with you. So these are the kind of skills that you will have to develop if you want to become a professional stock trader. Okay. So that is why I'm discussing each and every aspect of the trade with you so that you understand what are the skills that you will have to acquire. So spend like 10-15 minutes every day on my YouTube channel. When you look at enough number of trades, okay, you will understand what to look for eventually. Okay. in a stock? What are the factors we are looking for before we eventually put money at stake? Okay. So I hope this video has added value to your trading journey. Please share this video with your friends, family, business associates. Let them know what strategy we use to trade. This is very simple, very low risk. It is much more manageable. Even if you keep your stop loss somewhere here, it's not more than 2-3%. Okay, very much manageable. The stock never came back to the yellow line. So please like, comment, and share this video. Again, a disclaimer: I did not personally take the trade. It was my student from Italy. She took this trade and she displayed all the skills that I have taught her. Okay. And I want to teach these skills to you as well. So, congratulations to her. Congratulations to you for studying, taking the time to learn. You are putting very good efforts. Some of my students have learned so much through my YouTube channel that they have independently started taking trades. They send me screenshots through my WhatsApp, through my email. So please connect with me, preferably on WhatsApp, so that I can quickly respond with a voice message. I don't have any Telegram channel or some WhatsApp channel or anything. It's a direct contact with me. Okay. So let's build a community. It will help. Please share this video. I need your support on this channel. I need your support. When you share this video, it will reach those people who genuinely want to become professional stock traders. So thank you so much for your time again. I will see you in the next video.